So today we're going to be talking about the number one question a lender should ask you if you are moving to a new state. There's so many people moving to new states, and I'm seeing it in the comments all the time too. People are like, well, wait, do I need a job there? Yeah, you do. That is the number one question I'm gonna ask you. I'm gonna say, okay, you're moving from California to Texas, fantastic. Is your job, can you work remote, or do you have a job lined up there, or are you being transferred? Okay, the only exception to this is if you're retired or if we're using an income that does not matter for a location. VA disability, Social Security disability, those you can get anywhere in the country. We don't need permission, obviously, from disability for you to move to a new state. So if you work, right, we are going to need a letter from your job saying you can work remote. Now, if you say, well, I've worked remote for the last 2 years, but they don't want to put it in writing. Tough, we can't use it then. If your employer won't say you can work from remote and your job is in California, okay, I cannot use the income, period. And it's interesting because people are like, well, I'm gonna get a job when I get there. That is terrifying to an underwriter. That won't work. And the reason is that we can't lend on a house using income you're not going to have on the basis that you're going to be able to replace that income when you get there. It's nothing within the guidelines that is allowed. Okay, now, so let's say you can't work remote. Let's say that you're a teacher, okay? And let's say, and that's one where definitely sometimes people are like, well, we've been working remote. No. You and I both know at some point, if you were in a district and everyone is back at school now, but we did have a lot of teachers trying to move out of state when they were teaching remote, which didn't work for that reason. So obviously, a school district in California, if you're a kindergarten teacher, you can't be in Texas, right? Clearly. So in that case, what we're going to need in order to qualify you for a Texas house is, number one, we need to either not use your income and hope that your partner who you're buying with has enough income, or you need to get a job lined up in Texas. So in that case, what you'd be doing is, let's say you get a teaching contract, right, in a Texas school district. Cool. I can use that as income. Now, sometimes people are like, well, do I have to be at that job for 6 months or a year? Not necessarily. So we do a lot of loans where people have a job offer letter, and we're using the income on that job offer letter in order to qualify them. Now, there's a couple key points to it. Number one, it has to be a non-contingent job offer letter. Okay, what that means is there's no hooks, right? One of the ones that's really hard to do this with is doctors and nurses, because generally their offers or their letters are going to be contingent on them getting the correct licensing through that state. So in that case, we couldn't use the letter because the letter's saying we'll give you this job, but you have to get this first. So what we need is a letter that says, we're giving you this job. This is your start date. Okay, it needs to have a start date, and this is your guaranteed pay. Okay, because sometimes people are like, well, Jen, I've got a job offer letter, and I look at it and I'm like, it's commission. Commission is not a guarantee of anything. Commission is a guarantee that if you sell stuff, you'll get paid, but it's not a guarantee they're going to pay you anything unless you sell stuff, right? And in a situation like that, I would say, what is the minimum that they guarantee they'll pay you? And sometimes people, when you're looking at moving out of state and you're looking at a new employer and you're working with a lender, you might be going back to HR a couple times. And it may be because, HR is generally going to try to give you the vaguest letter possible. But as a lender, we need to make sure you have that job, and when you show up, you're going to get paid, because that's the income we're using to qualify for the house. Now, something to keep in mind. Let's say you're in a job in California where you worked 40 hours a week, but you got a ton of overtime. A ton, okay? Well, new job, new company in Texas, it's the same line of work, right? So you're like, it's the same line of work. I can use the base hours they'll give you. So if they'll guarantee you 40 hours, great, but I cannot use overtime that's not guaranteed. We have no idea if you're gonna get the same amount of overtime at a different company in a different state. We have no idea. So that's something to really think about. And I did a video about truck driver income a couple days ago. And the key thing with all of it is that what you need to understand is that underwriters are looking for what is guaranteed. Okay, so if you're going to be guaranteed, you know, and with nurses, this can get tricky as well because they'll have differential pay, they'll have all these different pay types. But if it's a new job, we're going to be going to what is guaranteed, what is the base. Okay, now if your new job in Texas, you get a salary, fantastic. If you get a bonus based on sales, we're not using it. And it's not because we're mean, it's because we can't. So it's really important for you guys to know that if you say to a lender, well, I'll get a job when I get there, that's not gonna work. That you need to have a job lined up, okay, in order for us to use the income, unless you can work remote, or if you have income that is not tied to a location, such as retirement income or disability income. Okay, so I'm sure I'll get a lot of questions. Questions as comments, as always, reach out. I am licensed in 48 states. I love that people are choosing to I can talk. I love that people are choosing to live in more affordable areas, or areas that are more outdoors, or areas that are closer to family. I love that people are moving with their heart right now. I love it. I think it's so awesome. And I want to be a part of that journey. But it's just important for you guys to know as a lender what we're looking at so we can help you accomplish that goal, because it is accomplishable. And sometimes people are like, well, how am I supposed to get a job before I get there? People do it every day. Okay? If you put your mind to it, you can do it, you know? And sometimes they're like, well, but I'm in like a $16 an hour job. Like, you can't get those in advance. Yes, you can. Yes, you can. The Great Resignation has made it better than ever to go job hunting, especially in a situation like this. Now, some people are like, well, what if I just get a job, but then I don't show up? Please don't do that. Like, why are you telling me that? Like, I need to think you're going to go to this job. I need a non-contingent job offer letter. If you're telling me you're giving me a letter that you're not actually going to show up to the job, I'm going to throw the letter in the trash, because that is my responsibility as a lender. So I hope this video has been helpful. As always, please reach out. Questions as comments. If you want to talk to a member of my team about how this works, or you're like, oh, I don't know about that, pick a time on my calendar. You know, we deal with this every day. It is not a big deal. It's easily accomplishable. You just need to know what you're doing. Okay? Thanks for watching, guys.